What is going on, guys? Welcome back to Equity Builders here on the channel. Today we are going to do something a little different for you. Usually we're positive on the weekly watch list. We like to take a balanced approach on the bull and bear. Today we're going to give you a completely negative view of a company that we think you should just completely get rid of, all right? We see too many new investors getting excited out here, buying big-name brands just to own big-name brands that they've known for their whole lifetime. And sometimes that's just not the way to go, guys. Sometimes you really just need to dig into the financials and understand what's happening to a company before you just put all your money in it, all right? So today we just want to warn you a little bit about something we think you should get out of your portfolio or avoid immediately.
And that is ExxonMobil. So this company is in an unstable industry, and it's not going to be looking good for them for probably the next 10 years. So they have some things going on right now. The gas prices are going down because we got like an oil war between Saudi Arabia and Russia. There's a whole bunch of politics involved as well, which is never a good sign for a business because that's something that they can't control. They can't control in their books a war on cutting prices of something that they sell so they can be the number one power of oil. Like that's not something that Exxon can control. So that's not something that they can fix in their books to cut costs or do all these other things that companies like to do to try and bring in more money, more revenue. Yeah. But other than that, ExxonMobil, it's already peaked. It's one of those companies that's been around for a long time, and its better days are behind it, and that's just the sad truth of it.
Yep. So with that being said, as he mentioned, the peak right there, when you're talking about fully mature companies, usually you have to see those companies have more acquisitions to keep on growing because their core business is, as I just said, already mature. And in the oil sector, we're seeing a lot of very mature or already all the way matured huge companies, huge providers of oil, right, that we need to run different things like cars and everything else. You guys know what oil is used for. But when we're talking about these companies, they really aren't going to see any rebound potential like some other stocks that took a dip, right? So I'm looking at the 10-year graph right here, and it's taken a nosedive, guys. I mean, since the peak here in 2014 all the way to 2020, this is just irreversible. And many long-term investors are not going to 10-year graphs. They're not going to 5-year graphs. They're not looking at payout ratio and these things. I mean, this is very important information, guys. As we see a slow transition to renewable energy, we're not going to see a huge rebound like other businesses might after the pandemic's over, guys. It's just not going to happen for this one. So just want to throw that in.
Yeah, and with that, a month ago, Exxon got kicked out of the Dow Jones Industrial. So, like, huge. When that happens to a company, it's
not
they
looking
don't
good.
See a rebound.
No.
And especially since you're just showing them the graph, seven years of decline, and then getting kicked out of the Dow Jones and expecting a rebound, that's not a good play. You're not going to get much, no. If any, growth out of this.
Yeah,
we're probably going to keep seeing a steady decline out of ExxonMobil.
Yeah. And another thing with their business that's of concern to many investors that they also aren't considering, oil prices are low right now. Everybody's thinking, okay, yeah, oil's going to rebound, and it might. You're right. We're going to need oil. Oil prices might rebound in the short term. But guys, again, as a long-term investor, you don't want to bank on what you don't know. You don't want to bank on a short-term trend when ultimately the long-term is not looking good for the company. It's like that doesn't make any sense, guys. Unless you're some type of advanced, like if you're an advanced short seller, it's one thing. But for us, it doesn't make any sense.
Yeah, it should not be in a long-term portfolio. It was the largest company in 2013, and now it's nowhere close. I mean, if you're underperforming the S&P 500 and things like that, you're not going to see that company come back to its powers that it once was.
Yeah, no. I mean, a lot of investors are unaware of risky things like this, and they get, I see them get attracted to the dividend, and they're like, oh man, if we go down here and actually look at it, 10% yield, right? They see this 10% yield, and they get all bent out of shape. I can make 10% back on my money. Guys, their payout ratio for the current trailing 12 months, is 207%. They're paying out 207% what they're currently making, and you're banking on the fact that oil prices will come back. guys, please don't lose any money. I don't want you to lose any money, all right? I'm telling you to stay away from ExxonMobil, all right? This is not a good investment. It's just not. I mean, like I said, if you're a short seller, whatever, you can short squeeze it when oil comes back if they don't go bankrupt sooner. But I mean, I'm not putting my money in. I'm not touching it. I'm not touching it.
I mean, they're paying out 207%, and they have a high dividend. So that's something that's just not safe, especially right now. But with that, they're underperforming the S&P 500, like I said. And it's just there's not a desire for a real and like for investors to just get involved in Exxon. There's no like obvious growth. The dividend is something that people jump on, but it's something that probably won't be around much longer.
It's not sustainable. You can't pay out 207%. No. I mean, how are you going to do that?
Mm-hmm.
Like, and with that being said, like you just said, they keep growing the dividend. So as management's concerned, they keep trying to push the yield higher to keep investors in. It's like, you can't afford this. What are you doing? What is management doing? I mean, I'm not fit to run the company either. Don't get me wrong. But, I mean, come on, guys. What are they thinking? They've been raising it for what? 15 year after year for like 15 years or something odd like that, right? And this year they're set to give like $15 billion in dividends at a 207% payout ratio. Like, this company's toast. They're toast, all right? The valuation has currently gotten lowered. They gotten kicked out of the Dow, as you mentioned, underperforming the S&P. They're on a steady decline for 10 years. Like, it's just get it out of your portfolio. Don't even look at it if you're not in the position. Just, I don't know what else I have to say about Exxon. I mean,
exactly. They have to cut those dividends because they're going to have to follow suit with Shell and other companies that have done it in the energy sector. They don't have enough cash flow. They don't have enough cash on hand or cash coming in to afford to pay dividends for 1 year. And they keep raising their dividend price.
Yeah, it's either going to get cut or like they're going to be forced to cut it. I mean, you can't do that. Like, I don't know, guys. I don't know how to tell you it's getting phased out. We made a video on Tesla. Obviously, we're not going to bring that into this video, right? We're not going to go down a rabbit hole. But if we take a look at it, oil is getting phased out, right? The state of California, as we mentioned in our other video as well, is not allowing internal combustion engine vehicles after the year 2035, okay? Oil has a timestamp on it now. California is the first to put a timestamp on it. You are silly if you think other states are not going to do the same within the next 5 years. And I don't want you to be in this stock when those announcements come out because I guarantee you it's not going to look good for ExxonMobil because they're not very innovative and they have really one core business. I mean, they're not. They've been doing the same old same and it's been working for them. But now that the company's in danger, I don't really think they know how to handle it because they still have a huge dividend. Payout ratio is whack. They're on a steady decline. And like I said, I don't want to be too redundant, but they're not coming back.
Exactly. There's just other ways, there's other avenues to be more lucrative in the stock market, especially in the energy sector. Maybe look towards renewable energy. Just there's still time to wait on those renewable energy companies as well because some might still come out of the woodwork and they might be the ones that blow up. So just pay attention to the news. I mean, just things like that. The oil department for the energy sector is just something that is very, very risky right now. And like for me myself, when I started investing, I made the mistake and put a good chunk of money into Shell because I liked their numbers. And then with the pandemic and everything that happened, I think I'm going to lose a good bit of money, and I don't want that to be the same for you guys. So that's kind of why we wanted to make this video. But again, just like take everything we say with a grain of salt because we're not financial advisors. But I do want to say thank you guys, and thank you for commenting, and subscribing.
See you guys next time.